The insurance mistakes that cost families millions. Intro. Imagine spending 20, 30, or even 40 years building your financial future. You work hard, you save money, you invest consistently, you buy a home, you build a business. You provide for your family. Then one unexpected event happens: a medical emergency, a lawsuit, a disability, a major accident, a natural disaster. Suddenly, years of hard work are at risk. Most families don't lose wealth because they don't work hard enough. Many lose wealth because they fail to protect it. In today's video, we're covering the insurance mistakes that have cost families thousands, hundreds of thousands, and in some cases, millions of dollars. Let's begin. Chapter 1. Believing it won't happen to me. One of the most expensive mistakes people make is assuming bad things only happen to other people. Most people understand risk intellectually. Very few prepare for it financially. The problem is that risk doesn't send a warning. A health crisis doesn't ask for permission. A car accident doesn't schedule itself. A lawsuit doesn't arrive after you're financially ready. The wealthiest families often think differently. Instead of asking, will something happen, they ask, what happens if something does happen? This shift in thinking changes everything. Insurance exists because uncertainty exists. Ignoring uncertainty can become extremely expensive. Chapter 2. Waiting too long to buy life insurance. Many people postpone life insurance. They say, I'm young, I'm healthy, I'll get it later. Unfortunately, later isn't always better. As people age, insurance costs can increase. Health conditions may develop unexpectedly. Options can become more limited. The biggest mistake isn't necessarily choosing the wrong policy. The biggest mistake is having no protection at all when loved ones depend on your income. Think about the people who rely on you. Could they maintain their lifestyle if your income disappeared tomorrow? This is one reason many families consider life insurance an important part of financial planning. Chapter 3. UNDINSUING. Major risks. Some people buy insurance simply because they know they should, but they never review whether the coverage is actually adequate. A policy that looks good on paper may not provide enough protection during a major event. Common examples include insufficient home coverage, low liability limits, inadequate business protection, outdated policies. Inflation matters. Construction costs change, medical costs change, financial situations change. Insurance plans should be reviewed regularly. Protection should evolve as life evolves. Chapter 4. Ignoring health insurance. Details. Many people have health insurance. Far fewer understand it. They don't know deductibles, out-of-pocket maximums, coverage limits, network restrictions. Then a medical situation occurs. Unexpected bills appear. Confusion creates stress. Financial pressure increases. The lesson is simple. Never buy protection you don't understand. Understanding your coverage is part of protecting yourself. Chapter 5. Not protecting income. Most people insure homes, cars, phones, but many fail to protect their greatest financial asset, their ability to earn income. Think about it. Your future income may be worth far more than your current savings account. Without income, bills continue, expenses continue, financial goals become difficult. Protecting earning power is often one of the most overlooked areas of financial planning. Chapter 6. Ignoring liability. Risks. Many families focus only on physical assets. They forget liability exposure. A single legal issue can create significant financial consequences. Liability protection exists because accidents happen. The goal isn't fear, the goal is preparation. The wealthy often spend considerable time thinking about risk management, not because they expect problems, because they understand consequences. Chapter 7. Failing to review insurance regularly. Life changes constantly. Marriage, children, new home, business ownership, retirement. Major life events can change insurance needs dramatically. Yet many people keep the same coverage for years without review. Financial planning should not be static. It should adapt to changing circumstances. A review once per year can help identify gaps before they become expensive problems. Chapter 8. Thinking insurance is an investment. Substitute insurance and investing serve different purposes. Investments help grow wealth. Insurance helps protect wealth. Confusing these roles can lead to poor decisions. Imagine building a house. Investing helps build the structure. Insurance helps protect the structure from unexpected damage. Both can play different roles in a financial strategy. The strongest financial plans often balance growth and protection. Chapter 9. No family emergency plan. Many families have insurance. Few have a plan. Ask yourself, would your family know where important documents are stored? Which policies exist? Who to contact? What steps to take during an emergency? Preparation matters. A good plan can reduce confusion during difficult situations. Financial protection isn't only about policies. It's also about organization. Final chapter, the wealth protection mindset. The biggest lesson from wealthy families is not that they avoid risk, it's that they manage risk. They understand a powerful principle: building wealth takes time. Losing wealth can happen quickly. Insurance is not about expecting the worst, it's about preparing responsibly for uncertainty. The goal is not fear, the goal is confidence. Confidence that your family is protected. Confidence that your assets are protected. Confidence that your financial future is more resilient. If you remember one thing from today's video, remember this: the wealthiest people don't focus only on making money. They focus on protecting what they've already built, because wealth that is protected has a much better chance of lasting for generations. Thank you for watching Wealth Shield. Protect wealth, build wealth, preserve wealth.